Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. Today is 2026 July 6th, and the market menu includes aluminum, geopolitics, Hong Kong listings, China EVs, and somehow roast meat as a property indicator.
That is a full buffet. Metals are moving, politicians are calling each other, EV makers are discounting, and Hong Kong landlords are apparently asking, what if crispy pork was monetary policy?
Story 1. Aluminum rose from near a 4-month low, even as Goldman Sachs warned that supply from Middle Eastern smelters is rebounding faster than expected. Simple version? The market is pricing today's demand, tomorrow's supply, and everyone's anxiety at the same time.
So aluminum is basically the friend who says, I'm fine, while holding 3 coffees and refreshing futures prices. If supply is coming back, why does the price rise? Because markets do not read headlines. They interrogate them like a suspicious airport agent.
For normal households, metals matter because they feed into cars, construction, appliances, packaging, and energy infrastructure. For investors, the signal is not buy aluminum blindly. It is watch whether commodity inflation cools, because that affects rates, margins, and portfolio diversification.
Story 2. CNBC reports that Trump spoke with Putin and Zelenskyy while Ukraine struck Russian targets and Russia launched another deadly attack on Kyiv. Translation for investors: Geopolitics just walked into the room wearing boots and stepping on everyone's risk model.
This matters because conflict risk can move oil, natural gas, defense stocks, currencies, shipping costs, and inflation expectations. Even if your portfolio is a boring mix of index funds, bonds, and cash, global stress can still show up as volatility and higher prices.
I slightly disagree with the usual advice to just ignore it. Do not panic trade every headline, yes, but pretending war risk is just background noise is how your budget gets surprised by fuel, travel, and grocery bills. Boring emergency funds suddenly look very glamorous.
Story 3. Hong Kong is targeting a 2026 securities-law overhaul to boost REITs and IPOs. Officials want to amend securities rules and give the Securities and Futures Commission more flexibility in handling listing matters, strengthening Hong Kong's role as an international financial center.
A listing regime is basically the nightclub door policy for companies. If the rules are too stiff, the interesting guests go to another city. If they are too loose, the dance floor becomes a liability lawsuit with strobe lights.
Story 4. China's EV deliveries remain under pressure. The China Passenger Car Association's preliminary data showed 1.04 million pure electric and plug-in hybrid cars delivered in June, down 7% from the same month in 2025, marking the 6th straight month failing to match year-earlier numbers.
And that happened despite promotions, which is the corporate version of shouting, "Please love me, I have coupons." The finance behind it is margins. If companies cut prices to move cars, revenue may hold up for a while, but profits can get thinner than airplane coffee.
For investors, this is a reminder to look beyond delivery numbers and check gross margins, cash burn, battery costs, and supplier exposure. For workers and consumers, the EV price war may mean cheaper cars, but also pressure on jobs, dealerships, and smaller manufacturers.
Story 5 is the surprise snack. Hong Kong roast meat chains are expanding in major shopping districts, while the broader street shop recovery remains uneven, and vacancies stay elevated in some areas. I came for macroeconomics and left craving duck, which is how they get you.
The serious point is that restaurants can be early clues about street-level demand, tourism, rents, and landlord pricing power. If food chains expand while other retailers hesitate, the recovery may be selective rather than broad, which matters for property owners, REIT investors, and small businesses.
So today's recap. Metals are moody, geopolitics is not background music. Hong Kong wants more flexible market plumbing. China EVs are learning that discounts are not a personality. And roast meat may be a retail indicator. Finance is weird, but at least lunch is covered.
Action checklist. Review commodity-sensitive expenses. Keep emergency cash realistic. Avoid chasing EV stocks on delivery headlines alone. And watch Hong Kong REIT and IPO reforms for capital market momentum. If this helped, subscribe to BD Daily Finance News Podcast and share it with one friend who thinks inflation is just vibes.
And tell us in the comments which signal you trust more: aluminum prices, EV deliveries, or roast duck density per square block. My answer is diversified, because even my jokes need asset allocation.